Well, good afternoon. Happy Friday, December 6th. Mark Milam here, your mortgage professional. Let's get right to what's been happening. Actually, not a bad day for rates, and that's a little surprising given the non-farm payroll report that we got this morning. Non-farm payrolls came in and beat expectations to the high side. 227,000 jobs created in the past 30 days. I think what might have saved us here is the revision to October. If you go back a month, the number that we got for October was just 12,000 jobs created. And if you strip out government jobs, we actually contracted. We subtracted 28,000 jobs just using the private sector. But an asterisk was kind of put around that because of two hurricanes and the Boeing strike. Well, we got the revision to that number today, and a lot of people were expecting that revision to go way up, that we would see maybe 150, 200,000 jobs created with that revision. And we didn't really get that. We got a revision up to, instead of being 28,000, I think the revision went up to like 36 or 40,000, somewhere in that neighborhood. So not a big revision to that October jobs number, which sort of solidifies the data that we received there. So I think taken in stride with this number that we got today for the past month, we can go ahead and take that and say, all right, listen, the labor market is steady. It's not booming, but it's also not collapsing, right? And we have to also take into account the response rate. So the way that we get this non-farm payroll data is through something called the Establishment Survey. Just a survey of establishments in the United States, businesses, government agencies that report this data to us every 30 days. But that response rate has been dropping post-pandemic. We used to get over a 60% response rate to that survey. We're now down in the low 40s, roughly 43%. So that headline number that comes in that gets revised twice is starting to get less and less and less credible due to the low response rate. By the time you get through two revisions, you feel like you've got a better handle on it, but that won't happen on this particular number until we get all the way into February. So for now, we'll sort of take that in stride. Unemployment ticking up to 4.2%, but what I really want to call your attention to is Redfin's predictions for 2025. Now, normally you take prediction data with a big grain of salt, but I will say I actually found this to be a really good read. Came out on December 4th. Home prices projected to rise about 4% in 2025. I could see that based upon inventory levels and demand. Mortgage rates remaining near 7%. Listen, no one wants to hear that. But I ultimately think this is probably a little more accurate than the surveys we've been seeing from the MBA or Fannie Mae. I think there's not a lot of downward pressure on mortgage rates, and we might need to get used to this interest rates between 6.5% to 7% throughout the balance of 2025. More in here about transactions. They do predict more home sales in 2025 than 2024. Listen, we'll take that because we're going to close out existing home sales in 2024 at 1995 levels. If you go on down, you can see fewer construction regulations. That makes sense with the Trump presidency. And then all the way down, real estate industry will continue to consolidate, and climate risks will be priced into individual homes, especially in coastal Florida. Let's go back to the interest rate thing, because I want to close out with this, with the interest rate. Everyone is hoping for lower interest rates in 2025. Of course, that's what we want. That's what you want. That's what everybody wants. But is that likely to happen? And how much does that likelihood play into the decision you make today about buying a home? And I think that's a worthwhile question to ask. And with that, I'll take you to one other article that I find particularly interesting. And this is from Wolf Street. And it says that everybody should go ahead and get used to these mortgage rates, right? And this is from the Fannie Mae CEO as well. It's important for mortgage investors, the housing market, and consumers to understand that it's unlikely we will see the low mortgage rates that we had during COVID. Not only is that unlikely, but how likely is it that we're going to go below 5% on interest rates? And I'll take you all the way down here to the bottom. And this part of the article I find really interesting. The average 30-year fixed mortgage rates were never below 5% in the data from Freddie Mac going all the way back to 1971 until the Fed started buying mortgage-backed securities in January of 2009. That was the first time that mortgage rates fell below 5% ever. And if you look at this chart, you can see what we're talking about here. I'm going to blow this up a little bit. You can see that we didn't go below 5% until 2009, and lo and behold, that's when the Fed began buying mortgage-backed securities. And periodically through the decade of the 2010s, this magical decade for mortgage rates, the Fed was engaged in various rounds of quantitative easing that suppressed mortgage rates. The thought that we're going back below 5% without the Fed purchasing mortgage-backed securities is not an accurate thought. And it's one that I think as consumers, as mortgage professionals, as housing professionals, as the media or economists, we need to wake up to is the reality is we are probably not headed back below 5%, and we will more than likely see interest rates hovering at the average that they've hovered at since the Great Depression, which is 6.25, right? 6.25 has been the average 30-year fix since the Great Depression, and more than likely, that's what we're going to see moving forward. Once you acclimate to that expectation, you can start to make clearer decisions versus hoping for something that isn't likely to happen. Listen, if it does, great. That is perfect. That's a great opportunity to refinance or maybe afford a bigger home. But for the time being, I think we are probably in for a period of interest rates between that 6.25 to 6.5 range up to 7% as we step into 2025. If I can be of any service to you over the weekend, don't hesitate to reach out. Mark.Milam at highlandmtg.com.